Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Voster with Victory Fiduciary, and I know it's been a few weeks since we have put a video out with summer and everything. We just decided to take a couple of weeks off, but I did want to talk to you about what we've been seeing happening just within the market. It's actually been somewhat of a quiet summer, so to speak. We're moving into August. We'll talk about some of the challenges that we may see as we move into this more seasonally weak period for the market. So we just want to kind of get into some of the things we're seeing. Obviously, the Delta variant is beginning to weigh on really a lot of aspects across the country, and so markets are likely trying to kind of digest what this actually is going to mean for markets long term. Is there the potential that we're going to have to go backwards in some of the areas where we've opened up? So that has been something. We're going to talk about some of the other fundamental things that we're seeing within markets. And so today's kind of subject or title is Brace Yourselves, the Test is Coming. And so I kind of say that a little bit tongue-in-cheek because as I've been, reading different analysts and, you can go to, just so you know, you can go to pretty much 5 different websites that focus on markets and financials, and you will get 5 different opinions on what is happening within markets and what's driving them. So, but I've been following a couple of different analysts and talk about the fact that it is so likely that we are going to see some sort of we call it a test or reversion back to the mean. And so we're going to talk about what that means and whether or not, what we can kind of take from that information. And so this is the S&P 500, and this is kind of just what I wanted to really show you here is just how extended markets really currently are. And so S&P 500, you can see we're up here, and this orange line here denotes the 200 moving day average. And so we are significantly deviated at this point. And so a correction from the top to here would represent about 10 to 11%. And so, that seems like a really like out of the realm of possibility, but we saw that just back last in September. And so, we've gone a long time without a significant correction. It's actually been over 6 months since we've seen, true corrective processes. And so we're overdue. And I've actually already been kind of trying to prepare clients that, we need to see some sort of correction. Now, when we come all the way back down to the 200 moving day average, I'm not sure, but it's absolutely very likely. So we should at least kind of be considering that in the back of our minds. And so, when we look though at how extended we are, what a great run markets have had, I want to show just a couple of things that at least, again, we should be paying attention to. Again, I'm not saying that we should be, heading for the hills and getting out of the market, because remember, it's healthy. It's part of a normal market cycle for us to see, these corrective processes move through the market. It's a way for us, we talk about how markets are taking a breather, they're taking a pause. So maybe we have to do that. And so if this happens, it's not necessarily a sign that inherently something is wrong. It's just kind of a part of market cycle. But something that I thought was interesting, that especially within the broad-based markets, is just the fact that we are beginning to see a wane in the amount of stocks that are trading above their 50-day moving average. And so this right here, this was as of this week, and just between like 45 to 50% of stocks showing, that's showing weakening though, because you see not too long ago we were trading much higher, closer to that 75%. And so again, just something to be paying attention to as we're seeing markets kind of at a top. And one last thing I just kind of want to point out before we move on to just showing some technical charts is kind of some changes that we're seeing within the technical program that we use to just kind of track what is moving within markets and where are areas of strength, where are our areas of weakness. And so something that's been really interesting is when we, especially particularly the sectors, we've seen a lot of like jostling and moving from spring to now. And so you'll remember back when inflation became a significant concern for markets, big tech kind of really took a hit. And so we've seen tech, and we expected that would likely be a short-term just responds again to inflationary pressures. And so that has really begun to play out here in the fact that technology has kind of been able to leapfrog over some of these areas. Financials is an area that we had been watching for months before we took some exposure there. That continues to be a really strong area of momentum, so something that we're watching. Something else that's interesting though is real estate has really been on the move, and so something that, again, because we are always trying to find those areas of strength, positive momentum, steering ourselves away from those areas that are weakening, and real estate has really been moving up and kind of like in an up and coming area, so something that we have been watching and tracking with our investment committee. When we look at the broad-based areas, not a ton of change. Large continues to really drag against the major asset classes. I would say the one thing of change is that mid-cap growth has been able to leapfrog over the other two small-cap areas, which for a while we were seeing the 1, 2, and 3 places be all small-cap growth, small-cap value, small-cap blend. And so mid-cap has been able to leapfrog over them. So that's just kind of like a snapshot of where we sit within the markets. And so I want to talk about a couple of fundamental areas. And again, as a reminder, fundamentals, we talk about with our investment committee that when we look at technicals first, and so those are kind of like the math and the rules, but then we like to bring in fundamentals, almost like playing a piano with both hands, kind of overlaying what we're seeing outside to kind of shed light to the actual technical environment. And so, we are beginning to see that it's possible that economic growth has begun to slow and is beginning to stagnate. And so if that rings true, that could certainly be a catalyst for markets to go into this next corrective process. Interest rates continue to decline. And again, just kind of pointing to this area that we're almost in at least kind of like an economic stagnation. And so typically August and September, they're historically weak areas of the market to begin with, particularly, interestingly enough, in the first year of a presidency. And so, we're in this area today. Markets, we are experiencing a little bit of a sell-off today. When I last checked, the Dow was down over 400 points. Again, though, nothing crazy. We have to expect to have these negative days, but today it's really right across the board, and obviously that also we have just a lot of just world areas that are weighing, particularly what's going on with Afghanistan, obviously, and the China markets were really hit hard earlier today. And so, we've got a lot of other like geopolitical areas that are weighing on markets. Now, will this be the catalyst for a 10% correction? Probably not. Markets have already kind of taken this news for now, unless something were to change that would be significantly impactful. Something else that happened that just came out today was the Census Bureau did come and say that retail sales fell by 1.1% in June. And this was largely driven by a drop in new car sales. But this was unexpected. So this number was definitely significantly more negative than what was expected, and so markets did respond to that earlier today. And so what I'd like to do, just really quick, would like to just go into just a couple things with the S&P 500, because remember, again, if we can kind of look at what's happening with the S&P, it does kind of give us a good global understanding of where we are with markets. And again, this chart is a little even easier to see than the first one I showed you. This is our 50-day moving average. You can see it's really acted like a nice line of support for the past few months. We've sat on it, we've bounced right off of it. And even then, we're actually pretty far extended from our 50-day. But then when we come down here and we look at that 200-day moving average, again, just seeing that deviation, that if we do experience what's called a reversion to the mean, meaning we would come back down to this, that's going to feel really painful. It might not be as painful as it seems, but because it's been so long and investors have gotten very accustomed to not seeing negative performance like that, I think that it's going to, it'll hurt more at the beginning. Something else, so just to keep an eye on, RSI, relative strength, is pretty elevated at this point. It's at about 68%. Now, this will probably be a little more corrected after today, but again, something, because remember, every time that we get super deviated with our RSI numbers, you can see we typically at least have a short-term correction. So again, we don't really make decisions off of RSI, but it's something that we watch and something that we want to kind of keep in the back of our minds, putting it together with other things. So those are the areas that I want to get into. Again, it's August. It's a seasonally weaker time for the markets to begin with, and then as well as September, and then typically as we kind of go from fall moving into holidays, end of the year, we see another pickup within markets. We've got some things happening geopolitically. We've got COVID still kind of wreaking havoc with the Delta variant. So, you know, there's still some wild cards out there that we should just be mindful of. That being said, there's still some definite areas of strength within the market that we can be capitalizing on. If you have questions about what we reviewed today, or you just have questions in general, we would love the opportunity to talk to you. You can always email me at ashleyr@victoryfiduciary.com. Otherwise, hope you have a great day. Enjoy these last days of summer, and we will talk to you soon. Thanks.